evening all. So today we're going to start our class just now, and we will do the chapter's final accounts for sole trader. Now I must ask you the question, who is a sole trader? Okay, tell me in your own words, put it into your chat box what you think a sole trader is. Right, so we'll start by asking questions, and this session today you will realize I'm going to go through quite a few questions, and through the questions you will get to know what the sole trader does as well as the accounting transaction for a sole trader. All right, so let us open the chat box and see what people are saying. Okay, a person who runs the business on his own. That's what Joel says. A person who runs the business on his own. Anyone else who would like to attempt and say, who is a sole trader? Who is a sole trader? Any other views? Do you know of any company that is that's run as a sole trader? Only one person owns the business, correct. Any one of you know of a company that's run as a sole trader? Do you guys know? Right, okay, so let us go to our next slide and learn a little bit more of the sole trader. Okay. And a business owned and operated by one person, so that's spot on. You guys said that. Most common form of organization. Fewer legal requirements. The owners may employ others. Now, as you know, it's very easy to start as a sole trader, and therefore it is one of the most common forms of organization, right? You don't have to have to fill in a lot of forms, etc. What is the reason behind it? The logic behind that is because if you become a sole trader, you will earn the profit that you generate. You have it 100%. If there are any risks, you bear that risk 100%. If there is any losses, you bear all the losses 100%, right? So because of this, there is very few restrictions and formalities, legal requirements around setting up a business as a sole trader. Now, if I look at it from a tax angle, the sole trader, even though it's a company, will be treated as an individual, and the individual will pay income tax the amount that the person gets from this business as a profit will get linked to his or her income, and they will have to pay the tax on it, right? I hope that's clear for you. So again, one person who owns that particular business, and therefore the person will have all the profits, any risks associated with it, as well as the losses. Yes, and another aspect of it is the sole trader himself may decide to work in the business, right, and take a salary as well. So we'll go to it a little bit later. And the person may also think, well, it's not easy for me to run it on my own, therefore I will employ others. That's why we're saying the person can employ other people as well. So here you go. What are some of the advantages and disadvantages? Advantages clearly are it's few legal requirements. You have full control over this business, therefore you retain all the control, therefore you can do whatever that you like with the business. You don't need to ask other people, other shareholders, other, what are the things, should I do this, do you guys agree, all those things they don't need to ask, because the sole trader owns the business 100%. It's not like a partnership where you have another person or multiple others who are running the business, who owns the business with you. In this case, you will own the business, so therefore you can make the decisions as you feel like, right? They will also have very close connections with the customers, employees. Of course, you will get 100% profit. And when it comes to finances, etc., you have greater secrecy. That means you don't need to reveal things to the others, right? Now, limited input on business matters, because this person may not have all the skills required. Therefore, it is limited input on business, right? He may have limited input on business. And of course, unlimited liability, right? That means when you do our CO5, the law paper, you will find out that as a sole trader, if there is any liability, if the company is not able to fulfill that liability, it will come to you. You may have to, as a sole trader, even sell your assets like houses, etc., to settle that liability. Limited finance, because the sole trader can only get finance up to what he or she has, right? What he or she can get. That's it. If you have a partnership, you will have 2 or 3 or 5 a number of people joining the partnership, and you can get more money. Now, as you know, when it comes to shares, limited liability companies, you can, of course, it can public limited liability companies as well as limited liability companies. By selling the shares, you can get a lot of funds, and this way you're not limited when it comes to your finances. Of course, again, as we said, the business acumen would not be the same of a sole trader, right? If you're gonna be a sole trader, you will definitely remain small, because lack of finance, expertise, experience, all those things will not allow you to grow as a company, right? And also remember, you're not a separate legal entity, this particular sole trader. Therefore, business continuity is not there. If something happens, if let's say there is a death, this person dies, then of course the sole trader, that particular company also goes down with him, right? Now, when it comes to a company, even if the shareholders, something happens to them, the company continues, right? There's no problem. Okay, any questions around this? Any questions? Right, let us go to a question now. And what I would like you to do is work out the question, the answer for this, okay? And then let us work out together later on. First, I'll give you a few minutes to look at the question, work out on your own what the entries should be, and then we will go through it together, right? Let's assume that J-Ott forms a sole proprietorship called Accounting Software Company, right? So let's assume that J-Ott forms a sole proprietorship called Accounting Software Company. So what he's named his company, that is Accounting Software Company. And on 1st of December, J-Ott invests personal funds of 10,000 to Accounting Software Company. What are the transactions here? What are the transactions here? I would like you to put it up in the chat box. Yes, Joel, you have mentioned eBay started as a sole trader company. Quite right. And now where are they, isn't it? Now where are they? So tell me, with this particular transaction taking place, what is the debit and what is the credit? Cash debit and, yes, Michael, capital credit. Yes, you're quite right there. Yeah, you're quite right. I'm pleased. I think you're studying. So here you go. The assets, which is your cash, you're debiting, and owner's equity, you're crediting. So that's J-Ot, his capital, you're crediting, right? Now how would it look, right, in your balance sheet? This is how it'll look, right? Cash, assets, and liabilities. Okay, so we're starting with a fairly easy transaction, right, before we get a bit more complicated. Now let us go to the next transaction. On December 2nd, J-Ot withdraws $100 of cash from the business for his personal use, right? The effect of this transaction on AC's accounting equation is what? What is the debit and the credit here? I would like to see this again. If you can put it in the chat box, right? Drawings debit, cash credit. Okay, so what do you think is happening to his capital account now? Yeah, what's happening to his capital account? Is it increasing, decreasing, or is it impacted at all? What do you think? It is decreasing, right? Now let us look at that. It's decreasing. Now let us look at that. So you're absolutely right, where the cash is reducing, right, and the drawings is debited, right? So which is quite right, and your capital, his capital has reduced. Now what does this mean? It means that the company actually owes J-Ot 9,900 and not 10,000 because he's withdrawn some cash for his personal use, right? Now let us go to the third transaction, and this is how it will look. Before we go to the third one, this is how it will look in your balance sheet. Okay, let us go to the next transaction. On the 3rd of December, accounting software company spends 5,000 of cash to purchase computer equipment for use in the business. The effect of this transaction on the accounting equation is what? What will get debited? What will get credited? Now I want you to answer me that. What is the debit and what is the credit? Yes, purchases debit, credit cash. No, not purchases. Well, yeah. So what is the debit and what is the credit? What do you guys think? I'm getting some good answers. Everyone should participate. Yes, so what is this? Very good. There is a little bit of a debate going on, right? What should we do? Purchases? Should we do computer equipment? What do you think, guys? What if you do purchases and not computer equipment? What do you think? Right, Ben Lane is saying computer equipment. Anybody else who says it's purchasers? And if we debit purchasers, what will happen? What will happen? It will go to stock, right? What else? What will happen if we put to purchasers? Actually, it might get written off, isn't it? Because purchasers is in the profit and loss account, yes? So computer equipment should be in your which account? Computer is what? What category will you categorize this one? Where do you think? Asset. Brilliant. Yes. It's an asset because it has a life more than 1 year, right? It'll have 4 years. So therefore, we are going to put it as an asset. So debit asset and credit cash. Now, if we had recorded under purchases, what sort of an error is this? Do you remember we did errors last time? Accounting errors. So you think of what sort of an error would it be, right? Let's say it's an error. How will you correct it? Now you have gone and accidentally put it into purchases. What would you do? How will you rectify this error? What will you debit and what will you credit? Yes, I'm waiting. It's an error. So what will you debit and what will you credit? Yeah, let us see what you think it is. Everyone's gone very silent suddenly. What do you think? Now you have accidentally debited your purchasers account. It should go to asset. What do you think? What now from the purchasers account, how will you take it out? That's the question, right? How will you take it out? So what happened? What was the first entry? You debited purchasers and credited your cash, right? Now you realize later on, well, purchasers is incorrect. It needs to go into asset account. Correct. Yes, you thought about it and absolutely right. Credit purchasers, debit asset account, right? Correct. So I will be touching on your previous lessons as well as we go along. So now it is absolutely correct. Now this is how the entry will look. Yeah. So assets account, right, or equipment account, debit, and cash credit, right? Now, will it impact the capital, right? Will it impact the capital? Not really, right? There is no impact here into his capital. Yes. So transaction 3, we will see how it is created. Now let us go into the 4th question. On the 4th of December, ASC obtained 7,000 by borrowing money from its bank. So they got money from the bank, they borrowed. The effect of this transaction on the accounting equation is what? How will it show in the accounting equation? What is the debit and what is the credit? You have borrowed 7,000. Cash, debit, bank, credit. Is there a particular name you will call that credit? Is it a bank loan account or just bank? Yeah, so debit cash because we are getting money here. So, and credit, yes, bank loan account. Yeah. Now let us have a look at the transactions. So what do you think? Will it impact his capital account? What do you think? Will it impact? Yes. Yeah. Adiraj says yeah. Let us see whether it will impact or not. A loan from another party, will it impact or not is the question, right? Now liability, we have a 7,000. Asset, we have a 7,000, right? You can see there is no impact at all. Why? Because the debit is there on the cash account, that's in the cash account. Credit or a liability is there, payable account, right? It's not impacting the owner. However, let us say the company is not able to pay. What will happen to it then? Who is liable to pay this? What do you guys think? What do you guys think? The proprietor will have to pay this 7,000, right? The sole trader will have to pay. Even if he doesn't have any money, he'll have to sell an asset that he has and then has to settle this loan, right? Again, the risk. This is what we talk about, the risk. And this is how it will look in the balance sheet. As you can see, owner's equity, nothing has changed. Payable has come through, and then we see the cash has increased, equipment has come through now and it totals to 16,900. So from that first transaction, if you remember, he invested 10,000. We are going through. So the first was 10,000 he invested. Then he went and took a 100 drawing, right? He took out. Then of course we went and purchased an equipment, and now we have got a loan, right? So you can see of this, what are the things that's impacting the proprietor's capital account, right? Let's do this one. On December 5th, 2015, accounting software company pays 600 for ads that were run in the recent days. The effect of this advertising transaction on the accounting equation is what? So how will you show this? Let us see. They pay 600 for ads that were run in recent days. The effect of this advertising transaction on the accounting equation is what? Expenses debit, cash credit. Anybody else? Any other views? So this expenses account, Adiraj, can you tell me, is it a P&L or balance sheet account? Is it a P&L or balance sheet account? What do you guys think? Well, is this expense, is this amount 600 that you guys are saying, put it into advertising, is it a P&L or balance sheet account? P&L? Anyone else? Yeah, I think you guys are quite right. Now the next question here is, will it impact the owner's capital account? What do you guys think? Will it impact the owner's capital account? Michael says yes. Anyone else? Vishali, yes, says yes. Okay, I'm getting quite a few yes. answers. Let us see how it will show. Right now, 600 for ads that were run in recent days. The effect of this advertising transaction, how will it be? Right, 600 assets minus, how will it, why are we saying the owner's equity is impacted? Why do you say the owner's equity is impacted? The guys who said the owner's equity is impacted, on what basis did you say that? Why do you say it's impacted? Any reason? Any reason? It is the right answer. As you can see, it is impacted. Because we said anything that is there in your profit and loss account, and at the end, right, at the end, because you will see it will be a profit or a loss. Let's assume in this particular month there was no sale, so only expense that we created, right? We created only an expense. So in that profit and loss account, we will see a 600, a minus 600, a loss, right? We will take that into owner's equity. That is the reason why it's impacted. Now, if there was a profit there, the profit will also be taken to the owner's equity, right? Does that make sense? Right? Hope you understand. Yeah. Now, let us go to the next transaction. This is how this will be shown in your profit and loss and balance sheet. As you can see, you get your income statement here. There was no revenues, only the expenses. So this expense, what we do is we take it here, right, to the owner's equity, and then it's netted off, and it is only 9,300 as a liability that we show, or the owner's equity, right? Transaction 6 is it performs consulting services for its clients. The clients are billed for the agreed upon amount of 900. The amounts are due in 30 days. The effect of the accounting equation is what? So here we are talking about a sale coming through, right? A sale. What do you think? Where is the debit and where is the credit? The sale is for 900. Credit sales, correct? Read the question very well. The amounts are due in 30 days. If I'm going to create this entry today, right? Today, what would be the debit? Where would the debit go? So do you think that they have received, this company has received the money? No, correct, we've not received the money. So if you've not received the money, where will you have it? Where will you post this transaction? There is a name for that account. What will you call that? Debtors, correct, correct. Yes, Vishali, it is right. So you will debit the debtors account and credit the sales account. Now, what about owner's equity? Will it impact owner's equity? Or there's no impact at all? What do you guys think? Will there be an impact or not? So remember what we discussed about the profit and loss. Okay, so think about it, think through, right? Just now in your transaction number 5, right? So think through. Right, so Joel is giving the logic behind it as well, why he says no, cause not. Right, so let us see how these transactions are recorded. Assets 900, yeah, it's because of the debtors. And then owner's equity is impacted. Why is it impacted? It doesn't matter whether it's a debtor or not, right? The way we are looking at it is now we've got a revenue. Previously with the 600 expense, we didn't have a revenue. Remember, I said if there is a net income, right, we need to include it here, right? Now, anything that's going into your profit and loss statement or income statement, you will take the net figure and include it in your owner's statement, right? Is that clear? So when you say no, there's no impact, think very carefully. Anything that touches your profit and loss statement is going to impact the owner's equity, right? So that is something that you need to remember, okay? Anything that touches the profit and loss account will impact the owner's equity. Transaction 7, what do you think? On December 7, 2015, ASC uses a temporary help service for 6 hours at a cost of 20 per hour. So they have employed somebody to do some activity. ASC will pay the invoice when it is due in 10 days. The effect on this accounting equation is what? So tell me the debit and the credit. Let us see in your chat box, where is the debit and the credit going? Where is the debit? On the 7th of December, ASC uses a temporary help service for 6 hours at a cost of 20 per hour. So how much do you think that they would have agreed to pay? How much do you think? What is the amount? Correct, right? That is the amount. ASC will pay the invoice when it is due in 10 days, right? So how much, what is the debit and the credit here? Where will you debit it? Yes, let us see. Help service debit, and is it what sort of an account is this? Credit, cash or bank? What sort of an account is this help service? Expenses, and where will it be, these expenses? Where will this expense be? Is it going to be in a profit and loss or balance sheet? What do you guys think? Yeah, I can hear you thinking actually. Adiraj says balance sheet. Balance sheet. Michael says, well, okay. Benlin says not sure. Right, now let's look at this transaction. Temporary help service, right? What are we doing? We are actually asking somebody to come and help us to do some work. Am I correct? So in order for this person to do this work, right, we are giving them something. What are we giving them? What are we giving them? We have agreed to something. What are we giving them? Cash. Has this cash been paid as yet? What do you guys think? No. If the cash is not paid, what will I do? I have to record it somewhere. Where will I record? What do you think? You guys need to think fast. Tell me. If it has not, creditors. Brilliant. Yes, Michael. Very good. Creditors. That's where you're gonna record it. Now, is it a balance sheet or P&L figure? Is it a balance sheet or P&L figure? What do you think? Creditors. What do you think? What sort of an account is this? Yeah, very good. That's right. Now, so in this case, what would be the debit and the credit then? Try again. Let us see where the debit and the credit will go. Michael, anything that we have not paid or what we have to get paid, like debtors, right, will be in the balance sheet. Anything that we will continue, like assets, we are taking it from one period to another, 1 year to another, because it has an economic life more than 1 year. We're going to take it from 1 year to another. We will record them in the balance sheet, right? That's where it will be. And it's also called statement of financial position, right? The financial position as of that particular day, right? So remember, any assets are things that we can take it from 1 year to the next. At times the assets will appreciate as well, and that's when we do a revaluation, right? And similarly, there's a depreciation component as well, correct? Now, in this case, what will be the debit and the credit? Let's attempt it again. Debit creditors and credit cash. Now, credit cash means what, Vishali? Credit cash means, let's talk in plain English. This is technical. Debit creditors, credit cash. Does it mean cash is going out or coming in? Cash is going out. So, in this case, is the cash going out? In this transaction, what do you think? Is the cash going out? Cash will go out after 10 days. Currently, it has not gone out. Yeah? Yes, Joel, you're right. So cash has not gone out. That is the reason why we are going to, what are we going to do? Credit the creditor's account. Where will the debit go? Where will the debit go? I think we got a correct answer at the beginning. Where will the debit go? It will be the help service, right? It's an expense account, and this expense account, no, Joel, the debit will not go into cash. So the correct transaction will be, I think we're getting a bit confused here. On the 7th of December, if you are to record this transaction, right, the debit will be where? It's an expense account, and it is where? It is help service, right? And it will be in the P&L, right? Credit will be where? Credit will be creditor's account, which is a balance sheet figure. Okay, is that right? Clear? Eventually, when we pay this amount, then the figure will be, the transaction will be debit creditors account, because I'm now setting off my creditors. And what else? Credit what? Cash, because cash is going out. Is that clear? Right? Is everybody clear now? Yeah? Right. Now tell me, is there an impact on our equity account, owner's equity account? Is there an impact? What do you think? Yes, says Michael. Anyone else? Not sure? Not yet. So what about the other guys? I know there's quite a few of you there. I can only see Michael, Joel, Vishali. Quite only few people talking to me. What about the rest of you? You need to participate, guys. Right? I can see quite a few here. What about all you guys? Moses, you have been very silent. What do you think? Is there going to be a impact or no? Impact on owner's equity or no? Moses, if you can type in the chat box whether it's a yes or no. What about you, Benlin? What do you think? Benlin says no. And how about you, Jackson? What do you think? Is there going no, I guess? Moses says no idea. Right. Okay, let us go and see what has happened in this case, right? So you can see definitely there is an impact, right? I just told you anything that touches of the P&L is going to impact the owner's equity. So please remember that. Anything that's touching the P&L will impact the owner's equity, right? Because here you go, this shows that the owner is going to get less money or less profit from the profit and loss account. Is that clear, guys? Right? Is that clear? Right? Any questions here? Because I think you guys have been consistently getting it wrong, this owner's equity, right? And anything that goes to, we did about 3 to 4 questions just now, right? If there is anything that touches owner's equity, right? Touches the P&L, it will impact the owner's equity. Okay. Right, now this is going to be the last one. Transaction number 8. What do you think this is? ASC receives 500 from the client it had billed on December. The collection of accounts receivable has this effect on the accounting equation. Now, what is the debit and the credit? This company receives 500 from the clients it had billed in December. Okay. So, what is the debit and what is the credit first? Well, what do you guys think? Cash credit, receivables debit. Now, Joel, you need to think about it. Are we receiving money or are we sending money out here? What do you think? What do you think? Is the cash coming in or going out? Let us start from there. Is cash coming in or going out? Coming in. Receivables debit to cash credit. Michael says that too. Now remember, are you guys cash debit, receivables credit? Now cash coming in, are you guys sure this is cash coming in or going out? We have to establish this first. Is the cash coming in or going out? Coming in. So if the cash is coming in, where are we going to record it in the cash book? On the debit side or on the credit side? Debit side. So in this case, there's no question, we are going to debit the cash. Is that correct? And the credit will be your debtors account or receivables account. Okay? Now tell me, will there be an impact on owner's equity here? What do you think? Will there be an impact? Michael says yes. Anyone else? Anyone else? Joel says yes. It's good to participate, right? I mean, it's okay whether your answer is right or wrong. When you participate, you will definitely get to know, you remember it as well. Okay, Moses says yes. Now let's look at the answers. Okay, so what is happening? Assets, between assets, there's a positive and a negative. Correct? And liabilities, no impact. Right? Owner's equity, there is no effect at all. Right? No effect at all. And if I created, let us say, if I created an allowance for bad debts, where would this allowance for bad debts be? Where will it get accounted? We did this in the previous class. Where do you think allowance for bad debts, where will it be? What do you think? Where will it go? Allowance for bad debts. Will it be in the profit and loss? Will it be in the balance sheet? Go and have a look at it, right? This is your homework. Have a look at your allowance for bad debt. Now, look at the transactions. What happened from the beginning? Assets. The owner brought in 10,000. Okay? And it went into his capital account, owner's equity. Then, the second one, he did a withdrawal of $100. This went out of the assets. That means cash got reduced and owner's equity also got reduced. It's clear? The next transaction is they went and bought 5,000, a computer for 5,000. So they debited the asset account 5,000, credited cash account. Is there an impact on the owner's equity? Nothing. The next one was 7,000, right? When they went and took out a loan from the bank. When they did that, a liability is created, but there is no impact on equity, right? So the 600, what was this 600? Do you remember? Do you remember the 600? What was it? Anyone? Do you remember the 600? What was it? Add expenses, correct. When there is an expense, right? And this is in the P&L, right? Liabilities, no impact, but of course owner's equity, there is an impact, right? And then we have 900. What was this 900? Do you remember? Do you remember, anyone? 900, what was this? Any idea? What was this 900? You should remember. And it is showing as a positive impact. Yes, it's a sale, isn't it? Clients to pay 900, and actually it was a sale. So any sale gets, whether it's paid now or not, if the sale happened today, we will record it in a profit and loss account, right? If the client didn't pay us, then it will be in the debtors, as in this case it is in the debtors account. Okay, if the client paid us cash, still our assets will go up. That means our cash will go up, right? So credit what? What will be the credit in this instance? Anyone? Where would the credit transaction go? For a sale of an item, where would the credit transaction go? You should know this. Well, everyone's quite silent. Where will the credit transaction go? Exactly. Thanks, Joel. It will be in sales. Okay? And because, as we mentioned, this is touching the P&L, it will certainly impact the owner's equity. Right? And what was this 120? Do you remember? What was this 120 they're talking about? It is an expense, isn't it? It's an expense that we have not paid. So, because we have not paid it, the liability has increased, but owner's equity has come down, because this expense will reduce my profit, correct? My profit will get reduced, therefore my owner's equity will reduce of the same amount. Okay, 500. What was the 500 for? Do you remember? The last transaction. What is the 500 for? Somebody's going to pay us, isn't it? Right? Has it got any impact? No, no impact. Right? Because it's between cash and debtors. And at what point would this 500 got impacted in owner's equity? The transaction before this would have impacted owner's equity. What would that be? What would the transaction be? Before this transaction became a liability, right? Liability, not in the sense it is we have a client who has to pay us. Okay, it's a receivable. So what was the first transaction? How did it become a receivable? The first transaction would have been a sale, isn't it? It would have been a sale. The first transaction would have been a sale. They didn't pay it at that time, and then when they eventually paid, our cash has increased and our debtors reduced. But at that, this is a second transaction, right? There's no impact in equity. But at this first transaction level, there certainly would have been an impact on equity. Now, any questions here, please? Are you confused? At what point equity gets impacted? Are you confused about it? Anyone who is confused about at what point you will get impacted? Well, any questions? Does it mean you understand everything? Right? I'm not getting any questions, so that means you guys all understood, right? Let's go to the last sheet. Yeah. Now I want an answer for this, please. A sole trader can make a profit and yet have a reduction in his bank balance. Which one of the following might cause this to happen? A sale of non-current asset at a loss, the charging of depreciation in the income statement, the lengthening of the period of credit given to customers, the lengthening of the period of credit taken from suppliers. So read the question very closely and tell me, what would you choose? First, second, third or fourth answer. Vishali, what do you think? Michael says 2. Moses says 2. Read the question very well. A sole trader can make a profit and yet have a reduction in his bank balance. Which one of the following might cause this to happen? So this means the bank balance has reduced. Now think about it. Sale of a non-current asset at a loss. Will it reduce the bank balance? I think I'm getting responses to all 4. Some says it's 1, another one, a couple of you guys have said 2, another person says 4, maybe 3. Anyone else? Adiraj says 1. Ahmad, what do you think, Ahmad? Well, I'm waiting for you. Ahmad says 4, lengthening of the period of credit taken from suppliers. Right, lengthening of the period of credit taken from suppliers. So what does lengthening of the period of credit taken from suppliers? So instead of 30 days, I'm telling the supplier, give me 60 days. Will it increase my bank balance or decrease my bank balance? Right? Think about it. So, anyone else? So if there is a loss, let's start from the first one. If there is a loss, when you sell an asset, there is a loss. Is there an impact to the cash book, the cash in your cash or bank? Is there an impact? What do you guys think? When we say asset, there is a loss. I have made a loss by selling this non-current asset. Is there an impact on the bank balance? A yes or a no? I want you guys to respond to this. Benlin, what do you think? Yes or no? Yes, Benlin says yes, it reduces. What about Michael? Yes or no? What do you think? Shrivya, Vishali says yes, thank you. And Divya, you have been silent, Divya. What do you think? Guys, how can, when there is a loss, is it, the loss is a book loss, isn't it? Right? So, I'm selling my asset, right? I'm selling an asset. I'm selling this asset for $100, let's say. Am I getting money or am I getting no money in this case? Is money coming out or money going out? What do you think? Is money coming in or not? Is coming in, exactly. So this loss that we're talking about is a book loss. That means just it is because of these accounting entries, it's created a paper loss. It does not mean I'm not receiving money. I have received money. Okay, so remember that a non-current asset at a loss, a sale of non-current asset, if I'm selling a fixed asset at a loss, I'm gonna get cash, right? The loss is reflected in your, where will it get reflected? In your profit and loss. Okay, it will be in the profit and loss account. The loss will get reflected there. However, I'm going to get money for this. Okay, are we clear on that? So sorry, so if we say that sale of a non-current asset, right, is it reducing the bank balance or increasing the bank balance? What do you think? Is it increasing or reducing the bank balance? Sale of a non-current asset, are you reducing or increasing the bank balance? You just now said you're going to get money. Increases, correct, increases, right? Charging of depreciation in the income statement. Is there an impact? Is there an impact? Is there an impact in the cash balance? Anyone? A yes or no answer, please. Joel, there is no impact, okay? Charging of depreciation in the income statement is not impacting your bank balance, right? So, let us see what is actually the answer then. Okay, this is your answer. So, you need to review your study material, I must say, and you need to look at the items that are impacting the cash balance and not impacting the cash balance, right? Because that's important. I think you guys need to read up a little bit more on that, and also you need to look at these files that I'm going to upload. Okay, so we will meet again on Wednesday. All right, good night then. Thank you.